The REIT renaissance that we saw in the United States in the 1990s came about due to crisis. And it was a crisis rooted in credit. It was a crisis that put tremendous pressure on property companies that were privately owned, that needed to pay down debt, pay back the lender, and recapitalize with equity. The public markets paved the way for it. And during the 1990s, we saw the U.S. REIT industry grow from an asterisk in the U.S. real estate market to a significant part of the U.S. real estate market. And it did so through the architecture of the REIT rules and the ability to list companies on liquid stock exchanges. There is no doubt there is a parallel here for Europe at a time where there is crisis, and that crisis is rooted in credit and in lending and the need to, no doubt, recapitalize holdings over time and provide investors in Europe with all the benefits of REIT-based and listed property-based real estate investment.
I think we're all aware of the fact that the European property sector is, if you like, punching below its weight right now. As a share of global real estate, we're actually declining, and that doesn't feel a great place to be in some ways. So there are things that we can do. There are things that the individual companies, the bigger companies can do, and there are things that EPRA can do as well, and I think that's really important.
In order to see a REIT renaissance in Europe, or a REIT burst like we had in the US in the early 1990s, would require a set of tax regulation and market conditions that may well be moving into place. The US REIT market grew largely as a result of distress in the private markets. We clearly have some distress in the private markets, not in the prime core sector, but some distress in the secondary, tertiary sectors. So that might well be there. But we also, in the US, the lack of confidence in private funds and valuations, I think, in the early 1990s added to the willingness of investors to place their assets at risk of the public markets. And we need to have that confidence in the public markets here. And I think the one main market condition that would lead to a REIT renaissance would be funds trading, listed funds trading at premiums to NAV. If and when that happens, which may well happen when we start to emerge from this current Euro crisis, then I suspect we may well see some REIT launch.
I think there are parallels between Europe today and the US and the savings and loan crisis in the late 80s, early 90s. And I do think that the listed sector could be part of the solution, but there have to be other factors in play as well. So there has to be investor demand, which has been a little bit absent at the moment for listed vehicles. There has to be the correct vehicle in terms of the correct REIT structure, and it has to be advantageous for people to package the real estate and or the debt into the new listed product. And that's what we've seen with the recent changes in the UK. It's made it much easier for people with the abolition of the conversion charge to do that.
The UK REIT regime is still a relatively recent phenomenon. The legislation wasn't introduced that long ago, and actually, of course, was introduced into quite volatile times. So in some ways, this is a sector still in its adolescence. There's more for us to do, and arguably there are sensible things which government and the regulatory regime can do to further improve things.
I also think that from a regulatory point of view, we must look at the efficiency of our markets. Capital raising, for example, is not a level playing field. We have different rules around preemption rights in the UK, in continental Europe and the US, and we must look at that to ensure that the market works effectively and as efficiently as possible going forwards.
The French REIT sector is a big one in Europe today. It represents 50 billion of market capitalization and a little bit more than 40 different companies, most of them very successful. I think that again, here, even given this success, there is still room for growth, room for expansion, room for new real estate investment trust, new SIIC companies being quoted on this market.
The SIIC regime is a great success for France. Since the implementation of the SIIC regime in France in 2003, the SIIC sector expanded a lot, created a lot of new business and new jobs for the country. What is clear is that what is important for us is stability in this regime for the future. And what we hope is that this stability will be put in place in the next year.
I have a wish in terms of change. I would appreciate stability and more stability. The system, the existing system, is really very efficient, and my dream is that we keep it.
I think we have been able to convince the government that listed real estate is a value for the country. And we convinced with the example of Banistabile that today is the only large and profitable company that remain in the country. And as a federation, we are explaining what other countries did, like France, in terms of listed real estate. It's the first time in my real estate experience, that is 25 years long, that I really see the government and public administration supporting a dialogue between public institutions, authorities, and the real estate sector. EPRA is one of my tools because I tried to create, and we created, a direct link between EPRA and the Ministry of Economy and the Agenzia del Demanio, the public real estate department, and so that they can directly obtain information and guidelines and best practice from EPRA experience and information. This is very important because the culture of public real estate, of transparent real estate, is not so spread out in Italy. And in Rome, sometimes they haven't a clear idea what to do. So we really use EPRA as a benchmark.
The public listed real estate companies are not well known in Germany. The degree of knowledge is very low, and we see that there is no profile for this kind of the branch.
The one condition that's set fair for Germany is the decline of the open-ended fund format. So as open-ended funds are closing, clearly that's opening up a vacuum for other vehicles to move in. But the German mentality to real estate values is one of protecting the stability of the asset value, and to encourage the volatility that the stock markets will bring is going to be a very hard call, I suspect, for German investors and managers. So I think Germany is a challenge.
When you look at Germany, it's an interesting market because the listed real estate sector is very low, and at the same time the funds were quite high. Now that the funds are facing a number of difficulties, it's a legitimate question to see if there could be a change from one to the other one. I think in terms of current returns, listed real estate stocks can match what the funds were doing. I think in terms of smoothing and managing the value of the underlying parts of the fund, which was very controlled in a German open-ended fund, is going to be more difficult for listed real estate companies.
If we talk about the closure of some open-ended funds in Germany, I think the first thing we have to see is what open-ended funds were standing for. Yeah? They stood for certainty, safe harbor, for transparency and anything else. And they proved this is all not true. So outcome of this is, on the one side, yes, there's new money in the market looking for investment in real estate, that should be an opportunity, more regarding the commercial real estate guys, because there are not so much money involved in resi real estate, in open-ended funds. But on the other side, we have to prove then that the money is invested at a better place. I think the key thing will be to show them that a listed property company is something which has enough liquidity, which has enough transparency, which has enough certainty that you put your money on.
There are several things to do to grow the listed sector in Germany. On one hand side, strong combinations like EPRA did with SIA. This is just implemented. SIA, the main and most powerful federation in Germany. Second, I think there is something to do with the pension fund and insurance company that do not count the investment in listed properties to the stock market. They should count it to their real estate market shares. Third, we have to create strong management teams with proven track record, which attract investors to invest in the sector. And fourth, I think there are some restrictions of the G-REIT legislation has to be changed in near future to make it easier to grow this vehicle.